Hey everyone, I'm Trading Man Dan with the Chart Guys, trader and technical analyst. We had a boring day in the markets, but we have some nice key information that is telling us to get ready because volatility is coming. I'll tell you what that information is. For those of you that missed it, this morning I did a pre-game live stream with longer-term mindset and charts and patterns I'm watching in the next year, and that's worthwhile to watch if you missed it. So today was a very boring day for the indices. There were some individual names with some nice volatility. Tesla had some. Microsoft even had some, but overall, the indices not doing really much of anything. And, we had the high of Thursday, the low of Friday, overnight high Sunday night, drop Sunday night. It's just a tightening range, right? And we know the burden's on bears. The S&P 500 futures chart has been holding 4-hour EMA 12. We did close just under it on the actual FOMC reaction, but for the most part, we're just grinding up that, which is what bulls want to see. So burden is on bears to take out one of these support levels if anything is going to change. And if it doesn't, we're heading up to higher highs and new all-time highs. So we should get some volatility tomorrow, and we're going to talk about NVDA in just a moment. NASDAQ is slightly weaker. It's a tightening range, same deal. 4-hour EMA 12 here, but high, low, lower high, higher, low, lower high, and just tightening up. It's possible we stay in low volatility tomorrow if, we pull back and next thing you know, we're still in this tightening range tomorrow morning. But we're just waiting patiently for a short-term break. And, once you see the 5-minute do this to me says, don't trade today. Because number one, the range that it was occurring in, it was like a 0.2% range in the first hour of trading, which is extremely low. And then the choppy nature, bull break straight into a support test, bull break straight into a support test, bear break, no follow through. It's just a choppy mess. And whenever you're that choppy, you want to be zooming out and focused on a more clear, longer term time frame. So again, yes, there was some opportunity in individual names, but it's sometimes tricky to find those individual names when the broader market is not doing much. So I do use the gauge of the broader market to say, I'm not trading today. This is not the kind of day that I'm looking for in terms of volatility and opportunity, because again, if volatility is the size of the pie and it's real small, it's real hard for me to get my slice. And if it's real big, it's real easy for me to get that slice. So we're looking for a break and we're top watch for NVDA. We know the importance, the most important stock in the market for me because of its weight in all the major ETFs. But we can say that the last 8 trading days is the tightest it's been in 2024. It was similar here. This was 7% range in 8 trading days. This is 6.7% range in 8 trading days. And when it broke, we did see a 25% move real quick. But we know volatility is coming. Doesn't have to be tomorrow. Doesn't have to be Wednesday. But again, just viewing this as the low, high, got a little choppy in there, but it's essentially just tightening up within this range. And if it breaks bear, that's a weekly lower high and a continued equilibrium. And if it breaks bull, then we haven't topped out yet, and we're still looking at weekly resistance. If I'm a broader market bull, I really want to see the semiconductors play some catch up here. Because right now, as I've been saying, in my opinion, if we're going to get red flags originating in the broader market, it's going to come from semiconductors and NVDA because of where their weekly chart stands comparative to healthcare, the financial sector, utilities, NASDAQ even. Everything is stronger than the semiconductors right now. And again, just knowing the NASDAQ is not going to go up in any meaningful way unless semiconductors do as well. And so that's my mindset. And I'm watching for the cracks. Are the cracks forming here? And how NVDA breaks this range is going to be key. Keeping in mind, MU has earnings on Wednesday, and that's going to impact the semiconductor sector as peers react to what MU does a bit as well. XLV, so tightening range, we had a bit of a sideways move, and XLV has been weaker over the last week of trading out of our major sectors, keeping in mind it's the least important sector out of QQQ, XLF, XLV, but I'm still keeping an eye on it. This is the 2-day time frame. High, low, lower high. Bulls really want to hold 152.85. If we lose that level, it will be the start of negating this potential weekly bull flag. So key support approaching, and we'll see if we tighten up with another higher low, which could take us to the end of the week or even next week before we get a clear break. The financial sector is still real strong. We had the dividend distribution And don't know if the adjustments are working just yet. Either way, what I'm watching for is this a cup and handle. And again, the financial sector gave us the cup and handle on the daily that followed through very nicely. And now we're watching, is this it on the 4 hour? Where we have the all-time high, we fail and consolidate, we get right up to it and fail, and this is still a bull flag. So my mindset is, if we keep holding, certainly 45.34, but even, pretty much 45.09. If we hold 45.09, it keeps a bull flag in play. And we know if you're coming off blue sky breakout, you got a double top and you're forming a bull flag. That's a pretty comfortable spot to be in. And, it's the kind of thing where worst case scenario for bulls right now, it's not a bull flag. We get another clear leg down, and then we just do what healthcare is doing, 2-day time frame. We're just going to look for, a tightening range. So XLF still holding on way better than XLV. But again, top watch for me is NVDA over the next few days. And I've been interested in XBI on the bull side of things to start this week. So here's an example of, I guess we'll wait just a moment. IWM first. So IWM daily consolidation's underway. Plenty of space for a higher low. We went straight up 10%. Bulls want to see hourly oversold, mark the daily higher low. We got real close to hourly oversold today. But I'm keeping an eye on the futures chart. And the mindset is this an hourly falling wedge to shape up a daily higher low? And we're going to get the answer to this question within a day or two. If it is, it's healthy daily consolidation and a quick higher low. If this breaks bear, then we say, okay, the retracement size is a bit more than the bulls wanted to see. And that would then create space for, maybe we set the higher low, but then there's space for the lower high. It's just less conviction for bulls if we get another solid leg down. So I approach this week saying, okay, XBI, 2.5-year highs in play, clear wall of resistance. If we break, I like the upside potential. And so I came into this week saying, I am looking bullish on XBI. And then today, that's now off my list. So that happens so much in trading where you establish a game plan. If this trade is going to come to me, it will look like this. And then it doesn't. And then that's it. So what I needed to see was 100 hold. If 100 holds, it's a bull flag right under key resistance, staying within striking distance of that key resistance. As soon as I saw this morning, first hour, clear lead bear sector. Okay, I don't like that. I'm not looking long into weakness. And then you break 100. All right, I'm not looking long. So I had a thesis. I was watching for this thing. It didn't happen. I didn't take any trades on it this week. I traded it a little bit to end last week and made some profit, but didn't set up the way that I wanted. So now what? Now we're looking for a weekly higher low, but we can bounce 3% and just form a daily lower high. It's because we're no longer in close proximity to resistance that I'm much less interested. I'm still going to be watching this sector, but it's the difference between I'm watching this sector to start the week and I'm watching this sector. It's a very different approach in terms of top watch, or I'll keep an eye on it, but it's not the ideal scenario of what I was looking for. And there's a lot of space for an hourly lower high to be the result of the next bounce. So if we see weakness in the market, now I'm going to be watching, well, there's a clear wall of resistance. Are we about to roll over and lose the weekly higher lows in the biotech sector? If we start to get red flags in the market, this then could take it to the bear list, but I'm just in observation mode right now. Cannabis sector, MSOS, bulls really want to break 724. There's a resistance zone 710 to 714, and then 724 is the more important level. But why that matters is if it breaks, we would go from a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high pattern, higher low, higher high. It would be the first shift in months. We would get over weekly EMA 12 for the first time in months. That would be great if that were to happen. As you know, I'm fully focused on TCNNF in Florida. Sold AYRWF on the negative headline to end last week. The dollar volume is junk there. I just can't trade anything with that dollar volume, but I just continue to love how TCNNF is trading, and it's a bull flag that confirmed today. $11 is our new base of support, new 4-month highs or whatever it is, and a lack of resistance. And I'm looking at 12 psychological, 13 psychological as the next two levels. but I just love how it's trading. It's doing everything that I want. So I'm watching for that to change, but until it does, this is where my focus is. We could say TCNNF is positioned extremely well. If MSOS can break the weekly lower high pattern, we now have a short-term red flag zone. If 1096 breaks, it's a short-term red flag. So I took my AYRWF capital and slowly started to grab a little more TCNNF to go from 80-20 diversification to just, I'm only looking at this name in this sector. And for that new added position that I averaged up, I can just exit if 1096 breaks and say, okay, I'm sizing up aggressive. If 1096 holds, if that level breaks, I'll size back down a little bit more conservatively. And that's one way to be navigating position size based on price action and the new information that is being given to us. But one thing missing is volume. MSOS had the volume today over the 20-day average volume, highest volume in pretty much 2 weeks. I like that. But again, I want to see TCNNF, because if MSOS has the volume, it's not people focusing specifically on TCNNF. I want to see TCNNF with the volume. You can see me putting my leg up, huh? Can't get too comfy. I'm keeping it up. Deal with it. It's bullish until 1096 breaks. And then we take a step back and look for a weekly higher low. Dollar. So the dollar is a potential falling wedge, but it's a clear downtrend. So the burden's on bulls to show us it's a falling wedge by breaking the lower highs, but just aware that it is a lack of follow through on the support break right now. And gold new all-time highs keep coming, which is good for bulls. New one today. Daily uptrends are clear guide. Weekly EMA 12 has been our guide for months. Silver's still struggling a bit. Silver dropped a good bit. Why is silver struggling? Because we have a very clear resistance zone. Reject, 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 reject. And on Friday, we rejected. Still a daily uptrend, but clearly bears are defending this level and price responded to it with a solid drop today. It's not common. I look, at my phone in the morning and see gold is up 0.05%. It's flat. And silver's down 2%. That's a very big difference between the two. But it's because of this resistance zone in the mid-31s that it's now a battle zone that the bulls must get over. Miners hit a new high today, new multi-year high, but no follow-through and a close at the low of the day. So have to see silver break that resistance zone if we're going to be seeing more upside potential here in the short term. Oil, daily stair step adjusted for the contract rollover has broken. Solid response to first hourly oversold, 50% bounce retracement. Bulls are not complaining there. So if that sets a daily high or low, that's a great sign for the bulls. If not, we're going to look to 4-hour oversold. Plenty of space for that daily high or low. Still a weekly downtrend and still a lot of space for that weekly lower high. So we'll see if the bulls can officially confirm the daily uptrend after a solid bounce over the last week and a half. Natural gas. I've been dogging on natural gas forever because it hasn't done anything. But Friday, UNG broke to the highest level in 2 months. A clear wall, triple top. And a break with now follow through, gap up and continuation. And we are very quickly 5% plus over that resistance level. So nice to see that kind of follow through where bulls, look at the volume, bulls buying the resistance break or don't have to sweat it because they get the follow through right away. And, of course, I would be taking some partial profits and trying to have my stop down near 1408 at this point. I did not take any trade in UNG, but I just want to acknowledge that it is shifting in a meaningful way for me. And it's still a clear monthly downtrend. We've been in a monthly downtrend for years. And anything under 2161 is just a monthly lower high. And that's 30% away. So there's still a lot of work to do. But we can clearly say from the last 2 months, a shift is underway. Now the question is, how long can bulls keep that shift going? Can we cross weekly EMA 12 and 26 bullish for the first time since we topped out multiple years ago? That's trying to shape up towards the end of the year here. All right. Feel free to ask any questions. Do good things. Last of the flowers. I gotta trim that bush back in the winter. Pokeberries that the cardinals eat. You can see they poop out the pokeberry seeds. Mexican sunflower. My favorite time of year for these weeds, goldenrod. People do everything they can to pull these up out of their yard.